Hi everyone. I just wanted to make sure David had started the recording. Lovely to have so many of you with us this morning. As David said, the sun is shining here, and it's also shining on the markets, and everyone seems to be a little surprised. But anyway, we'll talk about that later. Sorry. Nothing. Fine. Actually, with the markets up so strongly after the 3-day weekend, it's actually made me think of a point that I'd like to make later on in this session about expectation and what you may read or hear as part of the news and what you actually see on the charts in front of you. You may cause a certain amount of what we call cognitive dissonance, and the extent to which you have to sort of be semi-detached, you have to be aware of the news, but take a step back from it and look at the charts and see what the charts are actually telling you. And boy, they've been saying all sorts of things. But before we start, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. Trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. For those of you, I know, I've had a quick look down the list, and I know we've got lots of our forex program students. We've got, I can recognize some of you who've actually bought some of our quantum indicators, but I also see some of you, maybe this is your first time visit, or you may not know too much about us or who we are and what we're going to do and how we're going to look at the charts. And very, very quickly, we're going to look at the charts through the prism of volume price analysis. All the details on the methodology you can find in my books, which are up on Amazon. But with the forex market, in fact with all markets, but particularly with the forex market, we look at the charts, but we also look at the price action in the context of what is happening on the fundamental releases. And there's a third element, which we call the related markets. What's actually happening in another market, which you may not think has any connection to the forex market, but actually is also contributing to the moves that you may see on your currency and currency pairs. The classic example that we've got this morning is we have the everything is, as I said earlier, everything is going up. The sun is definitely shining on the markets, which means the yen is being sold and sold very, very heavily. The yen is one of these currencies that is both a proxy for risk on and risk off. And to that, to help us in, if you like, analyzing the flows into individual currency and currency pairs, as part of the quantum suite of tools we've developed, these very, very particular indicators for the forex market. You can see there's a quartet of them here: the strength, the matrix, the array, and the currency heat map. Best way to see everything is actually to have a look at the charts. So I'm just going to get myself organized with regard to the chart. I've actually got the Aussie yen up here because the Aussie yen is a pair that, well, we talk about, we trade, it's just a great pair. It's also a pair that is used as a proxy for market risk. What I also want to do in this session is carry on the kind of theme that we've been talking about, certainly over the last 2 or 3 sessions, and that is to do with different elements of volume price analysis. In particular, we were looking at last week candles and candle patterns and how volume can actually validate the price action that you see on the chart. That is the function of volume of VPA. It validates or it highlights that it is an anomaly. We had a great example of that actually in the Thursday afternoon session. It was day trading. We call it day trading the US session, but we look across all the markets because with VPA, it really doesn't matter what this symbol is up here on the chart. This happens to be the NQ. It could be anything because the methodology works in across the markets and in all time frames. Let me just bring up the Aussie yen. There we are. There's the Aussie yen that we're having a look at the moment, and we can see we've had some nice strong moves as we would expect for this pair because equity, the indices, Globex, the S&P, the NASDAQ, all the futures are moving up very, very strongly. So if you've taken off, these last 3 days, certainly yesterday, there wasn't much going on in the market, and we can see there wasn't much going on in the market. This is the currency strength indicator on the hour. You can see here, this tells us, because what this indicator does, not only does it pick up the flows of individual currencies and currency pairs, and also highlight potential trades, as it were, particularly when the currencies reach these extremes. And this is the hourly chart, so we could be seeing a potential trade for a reversal trade. This is where the candles, the candle patterns, and support and resistance comes in. But if we look back, this was yesterday, Sunday night and yesterday, the markets were, they were very quiet. It's a holiday here, it was a holiday in the States. That's what you would expect to see. So the indicator already tells you not only what is going on now, but it also tells you the expectation that are we going to get a move from this sort of congestion here that we had yesterday. So if you were trying to take a trade yesterday, well, good luck with that. But sometimes, just step away, wait until we have full participation, and then the trades will come to you. But that's what this indicator will do as well. David's going to highlight this as well, but VPA and the methodology, the NASDAQ, as we can see, is up at the moment. Where is it? It's up at 9.5. It has actually just popped over 9.6. You can see the strength of this move reflected, as I said, in the yen pairs. But for volume price analysis, for those of you, because as I actually get a lot of abuse online for some of the analysis that I write. I don't know why, but I do. And to all the people out there who who the keyboard warriors out there who take it upon themselves to email me, leave comments wherever this stuff appears at the time, I always feel like I should go back and say, well, look, actually, I did say this is what is likely to happen. And you know what? It did. But I really can't be bothered. So, my shoulders are broad. I don't care. I know this methodology works. I know our traders in our program who use it are doing really, really well. I know traders out there, investors who use this methodology, but price action and volume, they are doing well, so who cares? So there are trolls out there. I really don't. And in fact, there's a guy in America. He's a big options trader. He's developed a really nice a group of traders that he has in his community, and it's purely trading options. He uses VPA, and they always ask him, they say, what book do you recommend? And he just recommends my book, and I'm eternally grateful to him. But he's doing well, and his traders are doing. Anyway, enough of that. This is a post, as you can see here, May the 21st, the NQE mini, preparing for the next leg higher. So it's some while ago, and this is the daily chart, obviously. So with VPA, with the signals that it gives, you have to be a little bit patient. And as I said, we saw an example of this on the Aussie yen on Thursday, and you can catch a recording of that particular section of the webinar on my YouTube channel, where one signal that came in was a very strong hammer candle in terms of price action, very big wick to the bottom, but it didn't have a lot of volume underneath it. And I said at the time, I said, great hammer candle, and price action traders would have been, salivating at it and rubbing their hands in glee because it had a huge wick to the bottom, but the volume wasn't supportive. And in fact, it did move up. There was enough buying to take it, ran straight into a strong level of resistance, came back down below the wick of the candle and obviously taking out all the longs, because if you see a hammer candle just on a price action, what do you do? Where do you place your stop loss? Where you place it below the wick. It hit the resistance, came down, took out all the long traders, carried on further, and then it turned. So you have to be first of all, you have to be patient, but you also have to see whether the volume and the candle signal is in agreement. So go back to the NASDAQ. On the daily chart, the buying actually came in a little while back because it's a longer time frame, and this is where the buyers are. And I think the post actually says we were looking for 9.6 as as a target. That's what really upset people. How can you say it's 9.6? You don't know what you're talking about, etc. Anyway, enough of that. So that's what we're going to have a look at today. We're going to look at some candle patterns, support and resistance. And as I said, my little friend in America with his option traders, the other thing he says with VPA, one of the big elements for him is support and resistance. Now, it doesn't matter how you measure your support and resistance. I don't care whether you use Fibonacci levels. I don't care whether you use moving averages. I don't care whether you manually draw your lines on your chart. What VPA does, if you combine it with price action and volume, it will help to validate whether those lines are going to be respected as it were. And if they're not going to be respected and the price goes through, what volume does, it will then confirm the move. Right, that's what I've got to say on this. Where's David gone? Hold on a second. Let's see where he's disappeared to. Apologies, he's now back. Right. If you've got any questions, please just pop them into the chat box. More than happy to answer them, either anything on the charts or the indicators, or if you've got questions about our program, again, more than happy to answer. There's obviously the other issue now is we've obviously had some very strong moves, as we can see here, particularly with the mood of the market. We've had very strong selling of the Japanese yen, strong buying of the New Zealand and the Aussie. I'm looking at the hourly chart, and we can see here on the matrix, if I just put the yen pairs up, here we are. We've got the strongest being the Aussie yen, the New Zealand yen, and the pound yen. Now the question now is it going to offer a potential for a reversal? We're coming up to London. Obviously, there seems to be some strong buying of the pound. Is it going to be a reversal, or is it going to be a reversal, a minor reversal before the primary trend continues higher? We will have to wait and see. I'll pass over to you.
Yeah.